Crude oil long-term forecast for the week of February 18th, fxempire.com. The light sweet crude market, as you can see, rose to the $98 level during the session, or during the week over the last five sessions, but fell. And most of this fall really was on Friday. As you can see, we formed a shooting star right at the 95 level, an area where you would expect to see support, and that's essentially what we're left with. The real question is now whether or not we can break down. If we do, probably 91, 92 will be about as low as we go before we run into significant buying pressure again. And as a result, we think that a fall at this point is probably more of a buying opportunity than it is an opportunity to sell. With the Federal Reserve and its easy monetary policy, light sweet crude should continue to get a little bit of a bid underneath just as the dollar weakens overall. 100 is our target eventually, and perhaps to get there, we may need a little bit of a pullback to pick up the momentum, anyways. Looking at the Brent market, you can see that we pulled back during the week, but bounced enough to form a hammer that sits just under the 118 level. 118 is the gateway to 120, and we think that is the target eventually. However, this move has been relatively parabolic, so a pullback here really wouldn't be that big of a deal. And we do see the 115, and clear this, the 115 level as being one of the candidates. As you can see, there would be a little bit of support and resistance there. And as such, it would be healthy as the momentum's just been far too in one direction here. Brent is more sensitive to the Middle East, though, so make sure that you're paying attention to the news. Any bad news, shock out of Iran or Israel or even Syria to a lesser extent, could spike oil prices, and it will be felt in the Brent market much sooner than it will in the light sweet crude.